Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, May 10th, 2019. Lots to cover today, a lot of movement, nice intraday reversals in the market, very profitable trading day today. Let's go over the charts, see what happened, and we'll start out here with the bigger picture. Remember, don't lose sight of the bigger picture. I'll drill down by the end of the video. We'll get pretty granular, looking down even at 1 minute charts, but right now, again, swing traders, investors, this is what you're concerned about, and this is the Qqq Weekly Chart. Here's a trend line off the mid-2015 lows, very well defined. There's a breakdown back last quarter, fourth quarter of 2018 meltdown. What still appears to be just a strong snapback rally, which has now broken trend. That is by far the most significant developments we've had. Development that we've had in quite some time. So there's your trend line off the lows back on December 24th, and here's a solid weekly candle, not even close to the trend line. So there's a breakdown on the more significant weekly time frame. So lately, and for weeks and months now, a lot of my focus has been on 60-minute and daily charts, and I'll still get to those. Those help us kind of gauge the near-term levels and maybe give you an early jump on these sell signals. But as of now, this so far, it's still anybody's game as far as bulls and bears. Look, we're not that far off the highs. The new highs could easily be taken out next week. But the case that I've been making for quite some time is that this could still be just simply a bear market rally. And remember, QQQ is not the market. It is a tech-heavy index, mostly tech stocks, and 100 stocks. The S&P 500 is the market. Small caps, you add everything together, and that's really the stock market. And many of those sectors and indexes have not made new highs or only matched the previous highs. But QQQ has. But again, a breakdown, kickback rally, and as I mentioned, all that that rally has done so far is extended those divergences that were already in place and led to that initial leg down. They're not confirmed yet, so there is work to be done. Let me make that clear. We have a bearish candle this week. We have a breakdown this week that's confirmed on the weekly chart. We have a failure also of a breakout of the previous highs, if you look at it that way. So check marks across the boards for the bears, but you can't high five right now if you're looking for a much larger move down, because there's work to be done. However, I'll maintain what I said. If you shorted last week, you have some nice entries for swing trades. Keep your stops in place, and if the market's going to go to new highs, then you're going to get stopped out, even if you lowered to break even now. Very little downside to a lot of reward. And bulls, I'll get to the levels here in a second and show you, well, we had some of those today, levels you can step in and buy if you believe the market's going to go to new highs and beyond in 2019. So that's the chart of QQQ. Again, still plenty of work to be done. What would that be? It would be a bearish crossover on the PPO, which would entail a couple at least another week or more of downside here. We're well above the 200-day average, exponential moving average. That would need to be taken out. That's a lot of work. We'll drill down to the daily charts in just a second here, but let's look at SPY. Same story. We look at this trend line comes off the lows in March of 2009. It goes to the left of the chart. Well-defined trend line breakdown back test, and we didn't even come all the way into back test. It depends. You can play around. There's a lot of candlestick wicks. You can move it around a little, put it right here, say that was the back test, or a back test back in the fourth quarter, and another back test now, red candle. But here's the story. We've come down to support. We'll cover some different support levels on the daily and 60-minute charts, but here's a level I've had on the weekly for a while, 281.45. You can see, well, you know what, we're not even there yet. We didn't hit it quite today. I'm going to get to the daily chart, and I think that's something we may tag here next week, but close enough. It's a pretty important level, so I just want to say this, that that was probably the most significant technical development we've had since the lows right here, was the breakout above that level recently. So although SPY has now failed, or the S&P 500 has failed at its attempt to break out to new highs, it's not too far below, and it also has support here. So like I said, it's going to be a battleground here in the next couple weeks between the bulls and the bears. Same story as the QQQ. We did make a slightly marginal new high, but we're talking basis points. For all intents and purposes, that was an equal double top high from the high back in 2018. And by doing so, you still have negative divergence because if prices make equal highs and the indicators continue to make lower highs, that's negative divergence. So and they're big, powerful divergences. So again, they certainly play into the the longer term bearish scenario that I have, which is still another 25% more downside, and that's just on the next leg down to take us down to 214, somewhere around there on the SPY. So again, we'll see work to be done. Let's go down to the daily charts here, take a look at what's happened. All right, so that purple line, there's a level. It's around, I have it marked as 281.11. We'll call it 281 to 282. And again, that was a level I was watching weeks back that was taken out. We had several failed attempts. It capped all the attempted advances back in the fourth quarter correction. And we traded for weeks around that level, traded up through it, had a few intra-week breaks, but failed to take it out on a weekly closing basis until right here. So that will be, I think, an important level. And I talked about this earlier in recent videos. How do you know whether this is just a correction, a pullback, a great buying opportunity, just like the last few were, or the start of something more? And I think levels like that will tell. If we start, let's just say next week, whether we rally or not, I'm going to get to my near-term outlook in a second. But if we come down to that 281 level, and we just slice through it like it's not even there, like a hot knife through butter, and keep going, that will be a tell, because buyers should be stepping in with both fists if they get there. And so far, the way this correction has started out, it's been very impulsive, and there were a lot of shorter-term support levels and things that we were highlighting that didn't get that the buyers didn't step in at. So yes, we had a little kickback rally today, but you can see a lot of red candles this week. That's how that last one started. We had some impulsive selling back here. I have to say that. So it's not over yet for the bulls. Sometimes the buyers can step in and take it over. But like I said, in my opinion, there's a lot of overwhelmingly bearish evidence that says there's a good chance, still work to be done, but a good chance we go down more. If we do happen to pop up here and reverse soon, these divergences can certainly be extended. That's something I have to point out, that even if we popped up now and went up in the next week or two and made a marginal new high again, we'd still have divergences. So my longer term outlook wouldn't change for at least a while here. So let's just focus on the near term outlook, and we'll see how things develop. All right, let's start out with this morning. If you're only a YouTuber, you probably, I believe on the last video I said, watch today's low or yesterday's lows. A break of those lows might trigger some selling. But let me give you let me go to let's go to the home page here. And let's go to this post here. Charts I'm watching today. I posted this and put these charts together in the pre-market session. And something I pointed out, the more I looked at the charts overnight and into this morning, I highlighted some levels. I was just feeling a rally all day, and I actually was able to cover some shorts I came into the day with and go long, and even posted some nice day trade setups. But as I said, even if the NQ and QQQ and SPY were to take out yesterday's lows, again, this was posted this morning, we need to watch the 2830 minor support on ES along with 282-ish minor support on SPY, which could contain any lower lows today. And you can see that chart right here. That's the ES chart. There's 280, the 2380 level. Pretty decent support level there. QQQ, I'll get to these in a second. Well, I'll just go over these now. I listed these as potential bounce targets that are likely to cap any rally, and I still maintain these. I actually added one more level to QQQ since this post, this screenshot was taken this morning. That was in pre-market there about 9 o'clock. We went down today because the market opened after that, overshot this trend line and support level again, but rallied back up. And so we'll get to those in a second. SPY also put some levels there, and outline some bounce scenarios for NQ and QQQ. So let's get to the charts now. Hold on, let's close that out. Okay, so here's the here are those levels. Again, this morning I said 282. That was a comparable level to that support on ES right there. You can see pretty decent. You can see all the reactions there as well. And you can, I don't know if you can make out the volume price histogram. There was a thin zone there, and that's the top of the thin zone. You start to see some large volume price histogram bars. And we came down and kissed it almost perfectly. We did so, as I also mentioned before. We still had RSI divergence on the SPY there, and that served to be the the end point of today's rally. And then we had a great buy signal. I'll get to the 1 minute charts in a second. Intraday buy signal for a day trade. And there it is. So we went right up and kissed almost perfectly that 283, 288.83ish. And to make it very clear and simple, this is what I call my bounce target zone, or resistance zone, where I think that this rally is likely to end. So that means anywhere from where we hit today, which would mean open flat or gap down on Monday, or another that's about almost exactly 1% upside. Think I measured it already. I believe it was 1%, up to about the 291.65 level. I believe that will contain any kickback rallies. If we do much more than that, then maybe this was just another buying up on the road to new highs. But as of now, my 60-minute trend indicators, PPO signal lines well below the zero line. And again, most of what I'm looking at here, or factoring into the 60-minute chart and how far we might bounce, has to do with what's just happened recently on the daily and weekly charts. So that's the bounce target zone. And yesterday and today I covered quite a bit of shorts in swing counts, and I started adding those back just before the close today. Things like TVIX and there's short ETFs and futures and things that in different accounts that I manage. That's SPY. Let's look at QQQ. QQQ, okay, since the chart this morning, I've added one more level here, about 188.67. So again, it's a range. It's hard to, sometimes it can be easy, sometimes it can be hard to, especially right now. We won't know until next week. Let's see how things go as far as how far this bounce might carry. But that would be my range, and each of those levels are resistance. So each of those levels have the potential to cap the rally. And the way it works is, support is support or resistance is resistance unless taken out. So you can see we slightly overshot. My first level here, 185.53, was the bottom of that gap right there, or the top of that gap, I should say. And these reactions here, some to the left, and so we overshot it and closed, and actually reversed off it today just before the close. So if we pop that tomorrow, on Monday, we should carry up to about 187. And if they happen to take out 187, 188.67, I much prefer to see the rally cap here. It would play into my intermediate term bearish scenario that there's more downside. You also have this trend line right here as well. This trend line comes in. That trend line goes all the way back to right here, early January. It's not the trend line off the lows, not the primary trend line, but we've had several reactions on it, as you can see along the way. We slightly undercut it today, and as I often say in trading, fewer things are more bullish than a failed breakout. So at least intraday we reversed. There was also a gap to be backfilled right there, but that's it. PPO looks like it wants to curl up, hasn't done so yet. And here's the thing, and this is why I couldn't remain near-term bearish right now. I'm talking very near-term, and guys, I wear different hats. I'm an active trader. I'm a day trader when the opportunities are there, and I'm also a swing trader. So I might talk sometimes about going long the NQs today, and also still being short in long-term accounts. That's two different things, a swing trade and a trend trade. Sometimes I will micromanage those, meaning jump out, game a quick reversal or a counter trend rally on a swing trade, get back in, and then day trading, that can be mutually exclusive. I might go long the NQs or short the NQs while I'm already long or short in an account and positioned against it. So don't mean to sound confusing there, but that's how I trade. I have a lot of a lot of different accounts, and they all have different objectives and time frames. Trading accounts where I'm most active. Anyways, these are the levels, and again, that's the line to watch. But there's the bounce target zone, runs up to about 188.67, with a preferred reversal or cap of any rally next week to be here about 187. All the better, by the way, if today's kickback rally caps it and we shoot back down. And if that's the case, not much stopping us down here at about 176.75. Okay, we had another lucrative day trade setup. Actually, two today. Posted a day trade entry on platinum on a breakout, and that was good for a 4% rally. And that's some really nice profits if you're trading PL or PA, I should say, the platinum futures contracts, or you can trade PPL, PALL. But as far as the broad markets go, we had an almost identical setup to yesterday's. I posted this one earlier. This is QQQ on a 1-minute chart. So yesterday we had that day trade setup. You get this nice basing pattern after you fall quite a bit. There it is, nice basing pattern, a little divergence on the 1-minute chart. And when SPY and QQQ both broke out, that gave us that nice ramp. I forget what it was, maybe another 1% or so rally up to the target there, 185.30. And then again today, it's set up here for an even larger rally. Same setup, except we were more oversold on the longer term charts, so therefore it gave an even more powerful rally. So same story. I set a break above the range. That was what is that? 182.16. Should carry us up to 183.92, and you can see we hit that first target, took it out, back tested. At the time I said I still favor a move up here to at least 183.92, and then 183.92 was hit. That's a quick 1% day trade, and when you're day trading, of course, you take a much heavier, oversized position than when swing trading to make it worth your while, because you're going for much smaller percentage gains, but you don't have overnight risk. You're not going to get caught in a gap down or any earnings-induced movement there. So that's what happened today, and then we carried on. And I even at the time I said, look, that's why I went to lunch, shut down for a while, took a break, cashed out, but said we could still continue to rise there. I certainly saw the potential for more upside, what was going on, and said you could set a trailing stop and let it run if you want, but again, I just had a pretty good day up to that point, so I shut down. And then from there, where do we go? Let's go back to the 1-minute chart. So it's a 2-minute chart. That was that target. We popped through it, came and back tested it there, and rallied all the way up here to the uppermost those uppermost targets right there. And you can see from the breakout alone, that was from right there a 2% rally just from the breakout point, not off the lows. So nice day trading out. And again, these are what you look for on the if you are an active trader, a day trader. And it's not just this. You're going to get consolidations along the way. You want to see consolidations at support. Speaking of that, let's go back to one other chart I forgot to cover. Okay, and that would be this ES, or the S&P 500 E-mini futures. There's that 2830 level. And it wasn't hit, and that was also the, what did I say, 282 in SPY on the 60-minute, or whatever it was. We'll cover that in a second. So we hadn't hit that yet, and so the fact, and I said that might be what would cap any pullback this morning and contain any pullbacks. And sure enough, right down there, you can see here, we'll zoom in a little tighter. That was it, 280.30, dipped briefly below it and regained it quickly, and then boom, strong rally. So if you're a futures trader, this downtrend line may certainly come into play. You have this, and this is also a wedge type pattern, megaphone pattern. And for the bulls, you might want to look for a breakout above this pattern if it's impulsively. There's still going to be some resistance levels that come into play, so a breakout of the pattern alone might not do the trick, and it wouldn't be one that I would take based on what's going on the weekly chart. I've already shared my views, but it's not like I'll sit there through that and continue to be short. I will continue to scale in and add up to about that point right there, about 29.1750, and then at that point, should we continue higher, I'll be more concerned with stopping out or scaling out back out as I'm scaling in right now. So that's the story right now for next week. Two objective short levels that I can see, as well as an objective long if you want to go long. The shorting levels would be a break below there. You might as well just wait for today's lows, right about the same, 28.30. And if you're looking to short, a kickback here, you have both price resistance about 29.1750, we'll call it 29.18, and that downtrend line. So those would be, that's TA 101. You either break short a break of support, or when the trend is bearish, you short a bounce back into resistance. So that's what we're looking at for next week. And the same thing, I already covered it on SPY, but I'll go over that one more time and then we'll wrap it up. So same story on SPY. You have we're already at resistance 1 where we could cap the rally. And like I said, all the better if we gap down on Monday, and that proved to be all that we get out of a 1-day rally. If we pop up there, 291.65, that would also be an objective short entry. Or if we break today's lows, because we break today's lows, we're probably coming down here quite a bit more. And you can't see, that's why I like to use futures as well as SPY when I'm charting. You can't really make out much of a downtrend line, or at least not the same downtrend line that you have in the futures, because the futures will trade around the clock. Futures aren't your thing. I understand, especially the E-minis, because their contract sizes, they're over $100,000 of the, of market exposure per contract on the E-minis. However, keep in mind there's the new micro minis out there now, and they trade under this almost the same symbol. I think it's whereas ES is the S&P 500. I think you have what is it? They just put an M in front, so you can check out MES MNQ for the Nasdaq E-minis, and I think they're only 1/10 the size. So and the benefit, the reason I like futures is a lot of times I'll hit my price targets or entry prices in the pre-market session or after-hour session. In fact, that's I did today. I had came into the day short with NQ, and was able to cover it in pre-market and then actually reverse before the market even opened with a starter position, and then traded that in and out, and then went back in again when the those 1-minute charts, the Qqq broke out that I just showed over. So all right, we'll wrap it up here. And I would say this: don't trade futures unless you've done your due diligence and you've read up on the pros and cons and understand how to do those. Otherwise, stick with the ETFs. And if active trading's not your thing, forget about all these 1-minute charts, 60-minute charts. Just focus on the daily and weekly charts, because that's the bigger picture. And as of now, that indicates to me that there's more downside to come in the intermediate term, regardless of whether we bounce next week. And if we do bounce next week and we rally and start to take out these uppermost levels, I will most certainly do an update and share my thoughts at the time. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.